Hey guys, welcome to my channel. I am Shorav and today I am going to discuss about the basics of the mutual fund. So what is mutual fund, what are the types of mutual funds and what is the benefit in investing in mutual fund. So what is mutual fund? So a mutual fund is an investment option where an AMC or asset management company used to collect money from the individual or institutional investor with a common objective. So every AMC used to deploy a fund manager for a particular mutual fund. So those fund managers are responsible for creating wealth and return for the investor. So individually you don't have to look into any of those things. So the AMC is or the fund manager is responsible for those things. So how many types of mutual funds are there? So in a broader category, we have three types. One is equity fund, one is debt fund, one is balanced or hybrid fund. So what is equity fund? So equity fund, as its name says, that it deals with the equities. So here the risk will be very high and the return will also be very high compared to debt fund or balanced or hybrid fund. So in equity we have the large cap fund which deals with the large stocks. We have the mid cap funds which deals with the mid cap stocks. We have the small cap funds which deals with the small cap stocks. We have the multi cap funds which deals with the large cap plus mid cap as well as the small cap funds. Then we have the sectoral or thematic funds. They deals with a particular sector. Let us say that we have a pharma sector. There are some mutual funds which deals with the pharma sector. There are some mutual funds which deals with the technology. There are some funds which deals with the transportation and logistics. So they come under the sectoral fund or thematic fund. Similarly, we have the index funds and the ELS is the tax savings fund. Even you can get tax benefit if you invest in ELS fund. So now the debt fund. The debt fund, here the risk is low and the return is also low compared to the equity fund or balanced or hybrid fund. So the dynamic bond fund or income fund, short-term fund, and with ultra short-term debt fund, liquid funds, gilt funds, credit opportunity funds and fixed maturity plans comes under the debt fund. They used to invest their money in the government securities or corporate bonds or the corporate securities. The next is the balanced or hybrid fund. So they can be of equity oriented hybrid fund, debt oriented hybrid fund, monthly income plan and the arbitrage fund. So equity oriented hybrid funds mean if you invest 100 rupees, so the major portion will go to the equity and rest will be invested in the debt funds or something like that. Similarly for the debt funds, debt oriented hybrid funds, the majority portion will be in the debt instrument and a small portion of it to the equity. So here also the risk is low compared to the equity but more than the debt fund, but the return will be more than the debt fund but obviously less than the equity fund. So what are the benefits of investing in mutual fund? One, that it is being handled by the experts, so we don't have to bother too much. We don't have to look into our portfolio day by day. It is of low cost. There is no locking period. We can do an SIP like we used to do an RD in bank, which can switch from one mutual fund to another. We can create a goal-based approach for selecting a mutual fund. We have the liquidity. It can be redeemed instantly. For a liquid fund, it can be redeemed instantly. For any other fund, it will take maximum of T+2 days. You can easily track that from the fund house website, and even you can avail the tax savings also. So if you want to know more about the equity funds or debt funds or the balanced or hybrid equity funds, I will be creating more videos on those later on. So thank you guys for watching this video. If you like this video, please don't forget to subscribe. Thank you.